Hey guys, how's it going? Lee here. This is the first episode of a new series that I've made called ASX 0 to 100, where I cover 100 Australian stock exchange listed companies, publicly listed companies. Yes, that's it. It was actually an idea that was sprouted from a subscriber who I had met at lunch and said that he wanted more content where he could learn more about Australian companies without having to read them because some of the topics could be rather dry. So here it is, the first episode where I'm going to be covering the company CSL. So anywho, CSL is one of Australia's biggest companies in the biotech space and just in general as a whole, and produces some of the best life-saving therapies and vaccines, and the best part is that they're Australian based. Now to break down how they actually make their money, let's look at the products and services they offer based on their reports that broke it down to 5 main streams of revenue in 2019. Now the first one and one of the best products is the immunoglobulins.
Immunoglobulin.
I should probably preface this by saying I'm not a scientist, nor am I science savvy in any shape, form, or whatever. So I'm actually going to use the services of Google just in case I screw up the pronunciation. Now to keep it simple, they are basically antibodies to protect us from the illnesses and is used to prevent infections and treat autoimmune diseases. Now people who would normally use this service or product are those who are born without immunities and antibodies they need. This is also known as primary immune deficiencies, which affects 1 in 500 people in the US. And based upon their recent 2020 report, the growth for some of their products in this portfolio has gone up about 20 to 34% in sales. Now the next line of products is called Seqirus. Which is CSL's influenza vaccines business, researching and manufacturing vaccines. It is one of the largest vaccine providers in the world, and this is going to grow over time with 2020 as per their most recent report. Now number 3 within their list are their hemophilia products, which help blood clotting and including products that treat hemophilia A, B, and other acute bleeding disorders. Now in layman's terms, basically those who have these type of disorders don't have the ability to create blood clotting that would stop them from bleeding. So once they bleed, they just keep bleeding and it doesn't stop. Next one on the list, and number 4 of the 5 is albumin. Just play the Google sound.
Albumin.
Which is the most common type of protein found in our blood plasma, and its role to stabilize blood pressure. CSL's product basically helps restore blood volume and pressure in patients after trauma or surgery, with
albumin
also used in patients who suffer from burns. Now the last of their products is just a line of specialty products like Kcentra, which helps blood clotting in patients who need urgent surgery but are taking blood thinners. Now obviously this is quite specific and specialized as the, category would suggest. Now with all those scientific terminology aside, with my brain just as scrabbled as my pronunciation, let's get straight into the financials. So basically with all those products and a couple of other things on the side, it's generated them a net profit after tax of $2.1 billion in USD, which is a staggering amount of profit. And that's a really good cash flow given all the R&D that they have to go through and the high expenses in opening plants and distributing these products. And it's no wonder they're doing well. Look at the healthy profit margins they have and are operating with. I mean, this isn't a dropshipper telling you that they're making $1 million in revenue and taking about $50,000 home in profit. No. Across this segment, CSL is operating with a gross profit margin of 50%. Aside from just the cash flow, their balance sheet is looking rather good, as their net position is about $14 billion in assets. And in cash and cash equivalents, they have about $481 million. Now, personally, I would say that this is rather low as a cash position, given it's, the size of the company anyways. So I'd like to see that cash position a bit higher and maybe them cutting the 1 to 2% dividends that they're paying at the moment. But again, if you put it into context, it is about just under a quarter of their annual profit after tax. So it's really not a bad position to be in. It just could be a little better. So financials aside, what are some of the challenges and the positive future outlooks for CSL from 2021 onwards? Well, the biggest issue during this whole pandemic has been their ability to collect the amount of plasma they would normally collect. Now, if you're unaware, plasma basically is used to create many of the products that CSL has, and is the liquid part in the blood that holds all the proteins and cells you'll find in blood. So yeah, it's kind of essential for CSL, and they provide compensation for those who donate their plasma under strict CSL guidelines. Despite this being a challenge that's brought some extra costs for CSL, some brokers have seen it as an opportunity in the future to increase their prices if restrictions continue to be in place, as the demand for the immunoglobulin products still remains strong throughout any environment, as the need for the product still affects 1 in 500 people in the US. Now, of course, outside of the need for plasma collection, there are also other challenges that have been outlined in the recent annual report, some of which include the inherent risks of the sector. And now, even though these are inherent risks and some are a bit more obvious than others, it's still good to understand it because you need to understand what are the downsides of the businesses that you're investing in. So the first risk is kind of obvious, which is patient safety in using the products and quality control over the products. Now, in this space, you have people who may have adverse effects to the products they use from any pharmaceutical provider, but given the track record and the demand for its products, I really am not concerned about this for CSL in any shape or form. There are also the supply, capacity, and operations, which relates back again to the ability to obtain plasma for their products. Now that they've actually opened new collection points, but another lockdown in these major regions could see a decline in collection again. Looking down there even further, we've got competitors, and being able to innovate is always a massive key for a company to continue to do so, unless you're one of those old relics in the ASX, which continues to stay up there. I'm talking about your finance, your miners, your oil companies. I mean, I don't remember the last form of innovation they've had. And yes, given the track record that CSL has had and the Rona being in place, I doubt they're going to be stopping anytime soon. If anything, they're going to be pushing it even further and further. Now, I would say that the biggest risk or threat, in my opinion, in this space for any player in this market actually is just access in general. Because as outlined, there's so many players who can screw it up for you. You've got stakeholders who can deny access, tarnish reputations that ultimately affect the bottom line in creating growth and profits. Because let's say they smack a tariff on you, boom, your margins are affected. Do you want to go into that market knowing that you've now got to pay this extra tax? It's still kind of worth it. So you got to weigh a lot of things up, and that's governments, that's people who might publish certain articles about the efficacy of the product or the company. Now, to combat one of their biggest risks, I would say, is just they have to stay relevant and keep innovating over time, and being the only or best player within the space so stakeholders can't deny the products or services that their constituents need. Now, if we're looking at the future outlook, I mean, it's looking good, but it's not crazy great, because when you've got a solid market share globally already, some might slow down, but no, not in this case. We're still out there. They're still making acquisitions in 2020, and most recently of Viteris, who's focused on the treatment for rejection in solid organ kidney transplant patients. So as they continue to grow with their products and offerings, and as we continue to grow as an aging population with more complications, CSL seems to be in a prime position to provide some of the solutions to some of the biological issues the world is and will continue to face, especially with those lovely, lovely profit margins. I mean, goddamn. Anyways, guys, that's for the first episode of the ASX 0 to 100. I hope you guys enjoy it. Please like and subscribe to the channel, of course, and I'll catch you in the next one. Bye.